Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, thank you for making time today.
Good afternoon.
Well, Fed Chair Jerome Powell talked about Bitcoin in a webinar on Monday, and he said, as many others do, that Bitcoin has a lot of flaws as a currency, as a store of value, not least because of its volatility, and it doesn't sound like he's convinced there needs to be a digital currency, either from the Fed or elsewhere. Tell us about Jerome Powell's remarks here.
Yes, if you look at what Powell said on Monday, is that cryptocurrency like Bitcoin are too volatile to replace dollars. Obviously, we're not looking at Bitcoin as a replacement to a dollar, but it is specifically a bit more of nature of like a digital gold. Obviously, gold does not replace the cryptocurrencies. The gold does not replace the U.S. dollars, but it is an alternative investment. So obviously, the cryptocurrency, which is called as a crypto dollars or crypto gold. So this actually is a specific alternative asset. But in any case, the Chairman Powell is keep talking about how the cryptocurrency has a aspect of irregularities and illegalities, and that it can create some of the problems in terms of the money transfer. So yes, I think that this is an issue, and the regulatory framework will be coming quite heavily on the cryptocurrencies, including Bitcoin. But if you look at a lot of the companies who are using these cryptocurrencies, the Bitcoin, as a settlement, such as Tesla or MicroStrategy and Square, obviously they are using this as a certain entities for settlement for the transactions. So if that's the case, the need for the Bitcoin will continue to remain somewhat. The question mark is, though, how large the size of this Bitcoin market will become. Right now is about $1 trillion size, and that is quite small relative to the existing money transactions that you are seeing in global scale. So therefore, this can be a substitute for gold somewhat. But once again, it's not going to be a substitute for U.S. dollars. And clearly, we will look at that as a bit of another alternative assets rather than a replacement.
Right, and turning to the stock markets on Wall Street, stocks were up on Monday, especially the Nasdaq, which had a rough time last week. Helping was a decline again in Treasury yields. What's the story in the global markets?
Yes, as you said, U.S. market did rebound quite nicely, particularly for the Nasdaq, which was up about 1.23%. S&P 500 was up about 0.7%. However, the small cap Russell 2000 was down by almost 1%. And today, seems that the market continues to show somewhat of correction for the small cap, and also even for the large caps and the tech sectors. They're all showing some corrections of somewhere between 0.3 to 0.4%. Despite that, the 10-year Treasury yield has come down from 1.7% plus to now about 1.65%. Everyone were keenly looking at what's happening to the 10-year Treasury yield. And as long as the Treasury yield stabilizes, then the perspective for the growth stock, particularly the Nasdaq, will remain to be quite positive. Looking at the fundamentals and the valuations, we are quite optimistic about these Nasdaq and growth stocks because we are expecting huge earnings growth. I think that right now, some of these corrections that you are seeing in the market is that how significantly the economy will recover. Most of the people were saying that U.S. economy will recover to 6.5%. This is the Fed's expectation. Some of the investment bankers are saying anywhere between 7 to 9%. We think that these numbers are quite too aggressive. And that's why I think that the small caps are correcting and the overall market's correcting despite the 10-year Treasury yields coming down, which is positive for the equity market. So people are having some doubts how much recovery, how sustainable recovery with all these kind of boosting measures that you are seeing in the monetary and fiscal policies. We think that right now is a time to look at specific sectors and specific companies who are continue to show strong growth in earnings and sales in the future.
Sounds like some of that sentiment carried over into Korean stocks today, which started out higher, but looks like institutions and foreigners were maybe taking some profits. Individuals continuing to buy, though. Both main indices down for the day. Tell us about the local markets.
Right. If you look at the Kospi, it was down about 1%, and the Nasdaq was down about 0.95, so about 1%. I think that it's because what happened to Turkey, the emerging market. Actually, Turkey is much weaker in terms of the balance sheets and the external debt. And with interest rate hiking by 2% almost, they're indicating that they're in a very bad situation for the liquidity condition in terms of external debt. As we've seen U.S. dollar strengthen quite nicely in the past several weeks, that has resulted into emerging market currency depreciating, including Korean won. So yes, I think the Turkey had some effect, which right now the Turkey's market's down by almost 7%, 8% right now, whereas the Kospi is down by only about 1%. But once again, because Korea is considered as the one of the emerging market, and the currency is depreciating somewhat, that has resulted into a continued net selling by the foreign investors. Today, we saw almost 500 billion won worth of foreign investors net selling. Only the retail investors were buyer of about 1 trillion won, and that is supporting the market for the time being. Once again, though, Korea is quite strong in terms of the fundamentals, including the export numbers. And all in all, we think that this is a short-term technical correction rather than a fundamental basis for the corrections.
Got it. All right, Mr. Yu, we'll have to leave it there for today. Thanks so much, as always, for sharing your insights with us.
Thank you very much.